Hey everyone, welcome back to Corporate Decoder, where we dig into company reports to see if they're building an empire or just blowing smoke. Today we're looking at L.I.O.N Group Holding Limited and their latest revelations in an SEC filing. Get ready because we're about to decode what is really going on behind those numbers. And hey, before we dive in, if you like getting these unfiltered corporate insights, make sure you are subscribed and join our Discord community, linked in the description below. Alright, so the big news here is the release of their unaudited interim financial results up to the 30th of June 2025. Think of this like a mid-year checkup for the company's financial health. It is unaudited, which means it has not been officially checked by an independent accountant yet, but it gives us a real time peek at how things are shaping up. This report, Exhibit 99.1, is where the juicy details are. It is essentially the company's self-reported financial scorecard for the first half of 2025. Now, we are not going to get bogged down in every single line item because that would put us all to sleep. Instead, we are going to pull out the most important numbers that tell us the real story about L.I.O.N Group Holding Limited's performance. First off, we see they are filing under Form 20F. This tells us they are a foreign private issuer and are opting for this type of annual report. This is pretty standard for companies like L.I.O.N Group Holding Limited that are incorporated outside the US but still need to report to the US Securities and Exchange Commission, or CSE. Now, let's talk about the actual money stuff, the financials. Even though this is an interim report, it gives us a look at their revenue, their costs, and ultimately, their profit or loss. We're looking for trends. Are sales going up or down? Are they spending more or less to make their products or provide their services? These are the questions that tell us if the company is growing, shrinking, or just treading water. When we look at these interim results, the key thing to focus on is not just the absolute numbers, but the changes from previous periods. If their revenue went from, say, 100 million to only 90 million, that is a 10% drop. What does that mean in the real world? It could mean they are losing 1 out of every 10 potential customers, or that their prices are getting undercut by competitors. Similarly, if their costs to produce their goods or services are increasing faster than their sales, that is a red flag. It means they are making less profit on each sale, which can eventually hurt their bottom line significantly. We want to see that the company is managing its expenses effectively while still growing its top line revenue. It is also important to see how they are managing their debt. A company with too much debt can be in a precarious position, especially if interest rates go up or their income takes a hit. Healthy companies typically have a good balance between debt and equity, allowing them to invest and grow without being crippled by interest payments. We are also going to look for any mentions of strategic shifts or new initiatives. Did they launch a new product? Enter a new market? These are telltale signs of where management thinks the future growth will come from. And critically, we want to see if the numbers in this report support those strategic claims. Sometimes companies talk a big game, but the financials don't back it up. Looking at this filing, and specifically the interim financial results, we are really trying to answer one question. Is L.I.O.N Group Holding Limited on a path to success, or are there underlying issues that might be masked by some positive sounding language? We need to see solid revenue growth, controlled expenses, and a clear plan for the future that the numbers can validate. Now, looking at these results more broadly, L.I.O.N Group Holding Limited appears to be in a phase of reporting its performance. The focus here is on the interim financial results, which are crucial for understanding the company's financial trajectory mid-year. While we don't have the full spectrum of audited figures, these unaudited numbers provide a timely snapshot. If the revenue has shown a significant uptick, it suggests positive market reception or successful sales strategies. Conversely, if costs are soaring without a commensurate rise in revenue, it points towards potential operational inefficiencies or pricing pressures. We need to see if the company is effectively translating its business activities into profits. The incorporation by reference section tells us that this report is being added to previous filings, specifically forms F-3 and S-8. This means that what is in this report is now officially part of their ongoing public disclosures that investors rely on. It is like adding a new page to an important book, making sure all the relevant information is connected and up to date. So, what is our take on L.I.O.N Group Holding Limited based on this filing? It is still early days when we look at an interim report. The critical part is that they've presented their unaudited financials for the first 6 months of 2025. The real strength will be in whether these numbers show consistent growth and profitability. A key risk would be if expenses are outgrowing revenue or if there is a sudden drop in sales without a clear explanation. The opportunity for the company lies in executing their strategy effectively, whatever that may be, and showing through solid financial results that they are a sound investment. We need to keep an eye on their next full audited report to get a clearer picture. Alright, that is our breakdown of L.I.O.N Group Holding Limited's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.